Are you ready to crack your accounts payable interview and land your dream job? Today, I'll be walking you through must-know accounts payable interview questions along with answers and real-world examples so you can get the practical understanding. I promise by the end of this video, you'll feel more confident about your preparation. So grab a notebook and let's get started. Question 1. What is accounts payable? Let's start with the basics. This question might seem easy, but trust me, the way you answer sets the tone for the rest of the interview. Accounts payable is simply the money a company owes its suppliers for goods or services that it has received but hasn't paid for yet. It's recorded as a short-term liability on the balance sheet. For example, imagine your company orders office furniture worth 1 lakh from a supplier. If you've received the furniture but haven't paid yet, that 1 lakh will sit in the accounts payable ledger until the payment is made. Pro tip: while answering this question, highlight the importance of accuracy in recording liabilities. A small mistake here can lead to major issues during audits or while reconciling accounts. Moving ahead, let's talk about the question number 2, which is what is the procure to pay P2P process? The procure to pay or P2P process is a series of steps that businesses follow to purchase goods or services and make payments for them. It starts with identifying the business needs and creating a requisition, which is then approved. Once approved, a purchase order is sent to the supplier. After the goods or services are received and verified, the invoice is processed by matching it with the purchase order and delivery receipt. Finally, the payment is made to the supplier. Accounts payable is an integral part of the P2P process as it handles the invoice processing and payment steps, ensuring that all transactions are accurately recorded and payments are made on time. This process helps businesses manage their procurement activities efficiently and maintain control over their spending. Now let's check out our third question. What is three-way matching in AP? Three-way matching is one of the core and most important concepts of accounts payable. So let's break it down. It's the process of comparing the purchase order, goods receipt note, and supplier invoice to ensure accuracy before payment. For example, let's say your PO states 100 units of material at 500 per unit, but the GRN only shows 90 units received and the supplier invoices you for 100. Here, the discrepancy would be flagged and payment would be held until resolved. Moving ahead, our fourth question is, how do you handle invoice discrepancies? This question tests your problem solving skills. So think of a real life example to impress the interviewer. If you give a real life example, it will enhance the quality of your answer and it would sound more authentic. During the interview, you can answer this question with something like, first, I'd identify the root cause of the discrepancy. Is it a mismatch in quantity, pricing, or maybe tax calculations? Then I'd collaborate with the supplier and the procurement team to resolve the issue. For example, if a supplier billed for 1000 units but we only received 950, I'd flag the issue, get the supporting documents from the supplier, and ensure the payment is while resolving disputes. It reflects good negotiation and stakeholder management skills. Next question on our list is, what do you mean by 2 by 10 net 30? Do you know what it is? It's the manager's favorite question to ask these days. Let me break it down for you so you can understand it with ease. The first number, which is 2 in our example, indicates the discount percentage you get. The number after the slash, which is 10 here, represents the time limit in days within which you need to pay to get the discount. The number after net, which is 30 in given example, is the due date of the invoice by which you must pay to avoid penalties or interest. Imagine an invoice amount of 100,000 with terms 2 by 10 net 30. If you pay within 10 days, you get a 2% discount, which is 2,000. You'll only pay 98,000. But if you miss the 10 days, you'll need to pay the full 100,000 by the 30th day. Before we move on to the next 5 questions, let me quickly share something that will boost your preparation. If you're looking for more in-depth resources, check out my ebooks and courses on accounts payable and finance interview preparation available on my website corporatewala.in. You'll find detailed questions, answers, and real-world examples designed to give you an edge in your interviews. Visit corporatewala.in today and take your career preparation to the next level. Moving ahead, let's look at our sixth question. What are debit and credit notes? Explain with an easy example. Debit and credit notes are documents used in business transactions to adjust invoices. A debit note is issued by a buyer to a seller when returning goods received on credit, or when there is an overcharge on the invoice. It indicates that the buyer's account is debited, that is, the amount owed to the seller is reduced. On the other hand, a credit note is issued by a seller to a buyer to acknowledge a return of goods or to correct an overcharge. It indicates that the buyer's account is credited, that is, the amount owed by the buyer is reduced. For example, imagine you run a store and order 100 shirts from a supplier for 50,000. When the shirts arrive, you find that 10 of them are damaged. You return the 10 damaged shirts to the supplier. You issue a debit note to the supplier for 5,000, which is the cost of the 10 damaged shirts. This reduces the amount you owe the supplier by 5,000. On the other hand, the supplier will issue a credit note to you for 5,000, acknowledging the return of the damaged shirts and reducing the amount you owe them by 5,000. This way, both parties have a clear record of the adjustment made to the original invoice. Next question, which you must prepare, is going to be, what is the difference between AP and AR? Accounts payable and accounts receivable are crucial aspects of a company's financial management, but they serve opposite functions. Accounts payable represents the money a company owes to its suppliers or vendors for goods and services received on credit. It involves managing and paying invoices from suppliers, essentially dealing with the company's obligations to pay off its short-term debts. On the other hand, accounts receivable represents the money owed to a company by its customers for goods or services provided on credit. It involves tracking and collecting payments from customers, essentially dealing with the company's right to receive money. For instance, if a company sells products to a customer on credit, the amount the customer owes is recorded in AR. So, in short, we can say AP is about what the company owes to others, while AR is about what others owe to the company. And finally, one of the most important questions which an interviewer can ask you during your interview is, what are the key metrics to track in accounts payable? There are so many key matrices which a company tracks for accounts payable process. Few of them are number of invoice received, days payable outstanding or DPO, invoice processing time or invoice processing cycle, payment accuracy, and number of late payments. How can we answer this question in our interview? In accounts payable, it's crucial to track several key metrics to ensure the process is efficient and effective. First, the number of invoices received helps us understand the volume of work our team handles. Days payable outstanding DPO measures the average number of days it takes for the company to pay its invoices, which is important for managing cash flow. Invoice processing time or the invoice processing cycle indicates how long it takes to process an invoice from receipt to payment, and shorter times mean greater efficiency. Payment accuracy is another critical metric as it ensures that payments are made correctly and helps reduce errors. Lastly, tracking the number of late payments helps identify any issues in paying suppliers on time, which can affect our relationships with them. These metrics provide valuable insights into the performance of the AP department and help us identify areas for improvement. And that's it. These are the top 10 accounts payable questions you need to crack your interview. I hope this detailed explanation gave you the confidence to tackle any question that comes your way. If you found this video helpful, don't forget to like, comment, and subscribe to Corporatewala for more career tips and updates. Good luck with your interview.